So today I'm going to discuss some more 5 questions of the 2025, and this will be the last question for 2025 year of finance, right? So you can all can join our RBI mentorship program that is going on, right? 2026 mentorship and test series, where you will have the clarity of the things that are going on, right? Of the all the static portion, current affairs, and the descriptive answer writing is being comprehensively at the cost of 2,999, right? So you all can join and see some of the videos lectures are on the also in the trial basis. So here is the things that you need to understand, that we have made a playlist of everything, and we are taking a regular classes on it. So you all can join and enjoy the mentorship program. So let's start for today's class. So we have discussed these questions. One question I want to say, this question, the first question, that is LAF, and again the same question has been repeated. Only the 15 question it will be asked in the RBI grade finance part, right? Every year, right? Because 5 questions will be of 2 marks, and the passage question that you are saying is of 2 marks, and all the question which is one liner, that is it. So this question, that is, it has been repeated twice, right? Uh, that's why only try to think. Today I will be discussing 6 questions, but comprehensively, if you see, there is only 15 question in the year 2025. So now let's start the class. So here is the 11th question in front of you. 11th question, 10th question till 10th question we have discussed till yesterday. 11th question is a circular based question that has been asked in the year 2025. That question 11 is telling SEBI T plus 2 settlement cycle is applicable for which of the following corporate actions? It is very difficult question, right, to answer, because if you are very much aware of the circulars and everything, then you will understand. Obi SEBI circulars, right? Not the RBI circulars. So SEBI has prescribed a T plus 2 timeline for the credit of securities, right? In case of bonus share, in case of a bonus issue, not share, sorry, bonus issue. Is it clear? What does it ensures? It ensures faster credit of bonus, right? To whom? Investors only. To investors after a record date. After a record date. So other listed corporate actions followed different regulatory timelines, but T plus 2 timeline settlement cycle was followed by bonus issue for ensuring a faster credit of bonus shares to investors after the recorded date. Is it clear? So this question is very much easy. You can answer it, and not easy, but if you are aware of the circulars of the SEBI, then it is easy. Though anything can be asked in the CA, so I am putting it at a moderate to difficult level, right? This question, right? Now, after this, let's start with the question 12. Question 12 is what it is telling about. Think about which of the following statement, it is based on the inflation, right? Which of the following statement best explains cost push inflation in an economy, right? This is the aggregate demand, aggregate supply, and this is aggregate demand. Where whenever there will be a cost push inflation, the supply curve is moving inward. You are pushing it back, and there is something we can call demand pull inflation. Demand pull means this, right? Demand pull inflation is controlled by monetary policy, and cost pull inflation is controlled by fiscal policy. Everyone knowing that, right? Okay. So whenever which of the following statement best explain the cost pull inflation? Inflation caused by whenever. So if there is a cost push inflation, the aggregate supply is moving over here. Here is the AS, and now it is AS1, and the demand curve is there. So it was the equilibrium point. Everyone know average price level, APL. And if we are considering aggregate supply graph with, it is the growth that we are considering. Now the growth is here, and the prices are also being increased. So what is, now you can check the option. Inflation caused by excess aggregate demand over aggregate supply during high. Is it excess aggregate demand की वजह से होता है? No. Inflation resulting from an increase in wages. If there will be an increase in wages and raw material cost leading to a higher production cost. Is it? Yes, because this is the factor which is determining the supply curve, aggregate supply curve. Increase in wages always results to decrease in supply curve, and here the supply curve is decreasing. It is inward shifting, right? In cost push inflation. So the B option is correct. If you haven't to check the third four option, but it is correct. It is most appropriate. Inflation arising due to the excessive money supply created by the central bank. No. Inflation caused by higher indirect taxes too. Indirect taxes is also the determinant, but due to the indirect taxes, supply curve is moving, shifting inwards, but it is not the exact reason for cost pull. Cost push reason is for this increase in wages and raw material. If there will be an increase in wages and raw material, means that the cost of factors of production, the cost that we are bearing for factors of production, that is FOP, like for example, land we are giving rent, labor we are giving wages, capital we are giving interest, and entrepreneurship we are giving profit. This is the cost of factors of production. If it is increasing, the supplier, the firm, that the producer will think they will supply less. Obviously, when they will supply less, the supply curve will be moving inwards, right? In this condition. So whenever their price of the wages of the labor is increasing, right, wages of the labor is increasing, because it leads to increase in the cost of factors of production. So it will, raw material, right? With the raw material, if it is increasing, always you will supply, the supplier will think, okay, the cost now, earlier I was buying this raw materials as 100, now it is 300, so I will supply less. Think about that in producer point of view, right? So somewhat the, if there will be an increase in cost of factors of production, there will be a decrease in supply, obviously. So it is something which is related to cost push inflation. Is it clear? So the B option is very much clear. So baki rest of them are wrong. Now, the 13th question. Which of the following statement is most accurate regarding zero coupon bond? And it is also something which is related to your static knowledge. What is zero coupon bond? Zero coupon bond do not pay periodic interest. It is not paying the periodic interest. Periodic interest means in certain amount, like for T time or T plus one times, you are paying an interest, right? Zero coupon bonds are a kind of a bonds where you are not paying interest periodically, right? They are issued at a discount to face value. Whatever the face value you are having, they will issue at the discount to end and redeemed at par on maturity, and will be redeemed at what? Par on maturity. Is it clear? Is it clear? The investor's return comes entirely from the difference between the purchase price, right, and the redemption value. Whatever the purchase price, the investors return completely entirely, right, comes entirely from the difference between the purchase price and the redemption value, making price appreciation the sole source of the income. Is it clear? So if you understand what is coupon bond, then if you will read the options, zero coupon bond are issued at a discount and redeemed at face value. Will the return earned entirely through price appreciation? Yes, it is correct. This option I find it more appropriate. Just let read more option now. Zero coupon bond provide periodic coupon payments but no capital gains. It is false. It provides some capital gains, right? Zero coupon bonds are affected by changes in market interest rate. No. Zero coupon bonds always have a lower duration and coupon paying. No. Zero coupon bonds cannot be issued by the government. No. Like, so this is the moderate kind of a question that has been asked from your static portion of the financial, right, market. Is it clear? So if you have the concept over there, then you can understand it clearly. So the A option, that is very much easy. Now this question is something which is something I feel it bit tricky, but you have to answer. It is something related to, in the context of index future, which of the following statement is most accurate? Obviously, these questions and theme are not exact as per the, because it is a memory based examination, right? So it is also a moderate level kind of a question. So index futures are what? Index futures are settled in cash, okay, rather than the physical delivery. Index futures are settled in cash rather than the physical delivery. That is the meaning of index future. Is it clear? Now, if you will think about their theoretical price of determined using the cost of carry model, which incorporates the spot price, interest rate, dividends, and time to maturity. So arbitrage ensures alignment between futures and spot price, which is creating an alignment between the future and spot price, arbitrage, right, over time. So if you will see the options, that the index future eliminates systematic risk through daily market to market settlement. Second option, it has been given, index future price are independent of spot indexes movements due to arbitrage restrictions. So is it not more correct? Okay, just let read following options more. Index future are cash settled and their fair value reflects the cost of carry model. Is it not? Is it not? Think about it. The index future, cash rather than the physical delivery. Index futures are settled in cash rather than the physical delivery. Their theoretical price is determined using the cost of carry model, which incorporates the spot price, interest rate, and dividends, and the type of maturity. Okay, but arbitrage what it ensures alignment between future and spot price over time. So C option is most appropriate according to the question, right? So this is also the question which is of moderate level. If you will study the right in our course, I will be teaching you financial market. Then this kind of a questions will be very easy for you to answer, right? And some questions from the current affairs you can see in the previous year. That is, what does the Jan stands for? Jan stands for. Just tell me. Jan means Jan Dhan account, Aadhaar identification, and mobile connectivity. It forms the backbone of what? India's direct benefit transfer, that is DBT framework. Okay? The integration of these three elements enables efficient, transparent, and targeted delivery of government benefits. Is it clear? So if you will think about Jam Trinity means Jan Dhan, Aadhaar, mobile. Is it clear? So A option is correct, right? So it was very easy question. Now this question is also from the fiscal policy, right? What is the current corpus amount? It is a current base budget se question hai. What is the current corpus amount of the contingency fund of India, right? A 500 crore, 30,000 crore, 10,000 crore, 50,000 crore, 1,000 crore. So the corpus of the contingency fund of India was enhanced from 500 crore to 30,000 crore, right? Okay, in the year in the Contingency Fund Act, in Amendment Act 2021, right? So this question is also of a moderate level, right? So here we have completed all the 15 questions that was asked in your year in finance of 2025, the last year only, right? Why it is has been mentioned 16? Because this question, the LAF question, has been recorded twice, right? One, because this question has been asked in passage, but I have taken directly, right? First I have taken in passage this 6 7, and then I have taken directly, right? In first class I have taken this question directly. So you can understand only the 15 questions will be asking in your finance portion. See this question, first question was also there. So this first or 7 question has been repeated twice. That's why there is a 16 question in 2025, right? 2025 PYQ of finance. So daily I'm covering the 5 questions, right? Through this 5 question I will be covering your finance, then management, then ESI. Each and everything will be considered, right? And you can watch this playlist. This playlist is free of cost in YouTube also, right? So our RBI mentorship and test series classes are also going on. You can join this classes, and I have already told that the RBI Grade B mentorship, in which you will get all kind of things in your mentorship program, whatever the requirement for cracking the RBI Grade B 2026. So thank you so much. Keep learning. Bye. Take care.